Just a minute, we want to go back to tech. Nvidia coming off its best day since July after announcing plans to invest up to $100 billion in OpenAI as part of the data center build-out. Our Mackenzie Sagalos just caught up with OpenAI's CFO and joins us now with more. Mac.
Frank, I'm here in Abilene, Texas, at the epicenter of OpenAI's ambitious Stargate project. CFO Sarah Friar telling me in an exclusive interview a short time ago that the bottleneck, it's not money, it is power. OpenAI has reviewed upwards of 800 potential sites across North America, weighing land, substations, and transmission. She said that she said equity is too expensive. The company is looking to debt to finance this expansion, and even nuclear, it is on the table here to meet demand alongside renewables like all the wind and solar power that you see behind me. Now, I also asked Sarah how the financing really works when it comes to partners like Oracle and Nvidia.
Folks like Oracle are putting their balance sheets to work to create these incredible data centers you see behind us. And once those are online, we will pay for those as OPEX. In Nvidia's case, they're putting together some equity to get it jump-started, but importantly, they will get paid for all those chips as those chips get deployed.
Now, Friar also stressing to me that OpenAI will not just be relying on partners like Oracle. The company will build its own first-party infrastructure, because with that, they get to gain pricing leverage and protect valuable intellectual property. She compared this to when Amazon decided to build out AWS instead of relying on IBM servers. Frank?
Mackenzie Sagalos, live in Abilene, Texas. Mac, thank you very much. Taking a look at Oracle and Nvidia shares moving lower right now. For more on Nvidia's OpenAI investment, head over to CNBC Pro with a look at how some investors are worried the news is raising some red flags and it could be a bubble. You see the headline right there. Josh, I'm going to come to you with this one. JP Morgan, in fact, out with a note about this Nvidia OpenAI announcement, saying in part it's rarely a good thing when a company funds purchases of its goods by direct customers. And some are going so far as to say we're at the end of the build-out phase when companies have to, quote-unquote, pay people to buy their stuff. How are you seeing this, and how are you seeing some of the commentary from Sarah Friar we just heard from Mackenzie Sagalos?
So it's a great question, Frank. Thank you. And Joe and Jim both have a similar tenure than I do, and we were all around for this thing that went on in 1999 and 2000, which was vendor-financed technology purchases. And in fact, when that became basically the way companies were hitting their numbers or selling their IPOs on Wall Street, it did not end well. So it's a legitimate concern. Basically, we had this thing with telecom and technology, and we had vendor-financed sales of equipment. We had these competitive local exchange carriers, or CLEX or CLEX, we used to call them. There was a new one coming public every week. Basically, each one of these thought they were going to build their own version of AT&T, but with fiber optics. And a lot of the way that servers were being sold and routers and switches into that environment was basically like, here's the money, buy X amount of equipment, we'll do the financing for you, and then we'll kind of round trip it when your earnings are due, et cetera. It was like it was like the tail end of that particular boom. I don't think that that's a perfect comparison. And the thing about when you need your customers to buy, that doesn't really sound like it's the same thing as what I just described as is taking place right now. These investments are going to be made anyway. These data centers are going to be built out anyway. And whether one player wants to have a bigger investment than another player, it's not oh, we need to do this in order to make our numbers. It's like, no, strategically, we want to be part of this project. In the case of Nvidia, you're talking about a $4 trillion and change company making a $100 billion investment over multiple years with an obvious ROI attached to an investment like that if it leads to GPU sales and services revenue. It's a little bit different than what we've seen in prior CapEx booms. So I won't say it's totally unfounded concern. I would just say it's not quite as dire as that rhetoric makes it sound.
I want to go to the back end of that headline we just showed, whether or not this is a bubble. There was a Bain report out today saying by 2030, there's going to be $800 billion of a revenue shortfall for these AI companies, based on the investments that they're making right now. Jimmy, you're wincing a little bit.
I'm giving a wry smile.
Is that potentially one of the reasons you think we may see an Nvidia pulling back today and Oracle pulling back today? This report, again, from Bain, $800 billion revenue shortfall. In all fairness, it's in 2030. I do want to point out it's in 2030.
I want to be careful about the parable of the grasshopper and the ant, but 2030 is a long way away.
Well, it's a long way and a short way away.
No, it's a long way away. I mean, it just is. I think maybe a different way of answering your question or rephrasing your question is, will there come a point in time where the AI trade is a bubble? Almost certainly. Is it now? Almost certainly not. I don't know what inning we're in, third, sixth, but we're not in the ninth inning here. Josh pointed out what was going on in the tech telecom boom of the late 1990s. But as he points out, and as I'm going to repeat slightly differently, there's a question about whether this money being spent is being spent on productive return on investment types of projects, or if we're just laying down dark fiber optics as we were doing in the lower end of Manhattan. I saw it all day long. You dig up the street, lay fiber optics, pave it over, and do it the next day. I mean, literally the next day. And you end up with a lot of unproductive capacity. That's just not where we are in this trade right now. So to the other side of this, I look at the announcement between OpenAI and Nvidia yesterday, and I say to myself, great. Nvidia is enjoying exorbitant profit. Yeah, I'll call it that, but I don't mean it in an accusatory fashion. It's enjoying exorbitant profit, and it's recycling it back into the ecosystem, which is the means by which Oracle is going to get paid for what it's doing with OpenAI. It's a virtuous cycle now. Will it at some point become unvirtuous? Yes. If that's 2030, I'm sorry if this makes me the grasshopper. I'm not usually like this, but I'm not going to worry about it in 2025.
Yeah, I think we take psychologically in the financial services industry, we take things to an extreme. We immediately say it's a bubble, or it's a raging bull market. Bubbles are built upon leverage. I'm not sure what we're doing right now is building upon leverage as it relates to infrastructure surrounding AI. In the 90s, we were building that innovation upon leverage. I think this is something different. And I think you have to be honest with yourself and say, look, would you be surprised if you woke up 6 months from now and Nvidia is trading $145 or $150? I don't think any of us here would be surprised by that. I think that's a natural correction or a natural moderation in the market. That's not necessarily a reason to move away from the position. All that's really doing is setting an expectation and saying to yourself, this in fact could happen in the future. It doesn't defeat the premise that we have a very strong thematic investing AI story that's currently unfolding. I think it's more just about, okay, set your expectation, understand this could go either way in the next 6 to 9 months, but overall the 30,000-foot view is a very compelling and strong one.
All right, Jimmy, you want to throw a tag on that?
I think Joe just made a great point when you used the word leverage. It made me think about, I am a bit of a disciple of Ed Yardeni. I think he gets it right when he says, where do recessions occur? When does the economy go awry? He points out that it's not because the Fed raises rates. That's not the condition we're in right now, obviously. But it's when the banking sector gets into trouble. It's when the banking sector gets into trouble, perhaps because the Fed raised rates, and they can no longer lend. We are clearly, to your point about the Fin 5, Joe, we are clearly very far from any difficulties in the banking sector. And that would indicate to me that this AI cycle that we're going through and this overall economic cycle has legs.